Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's talk about what happened today, what we can expect moving into the final day of the month and the week tomorrow, and pretty much, well, into September, which seasonally is one of the worst, actually not one of, literally the worst month of the year for the market in general. Tesla, SPY, QQQ, whatever. By far the worst. Like, and it's not even close, unfortunately. So we'll see if that actually plays out. I mean, seasonality is a thing, obviously, but it doesn't mean it has to play out every single time, in a bearish fashion. We'll see. But I'll give you my personal thoughts. Let's jump into it. If you enjoy, don't forget to hit that like button. This is not financial advice, and I am not a financial advisor. And of course, my membership section on YouTube is live for just $2.99 a month. You get access to all my intraday thoughts, posts, updates, technical analysis, options flows, sometimes as well, like other stocks and stuff as well. I was gonna say, general market stuff, QQQ, SPY, whatever. Or you can upgrade to the $4.99 a month one instead, and you get all of that plus NVIDIA daily updates and analysis as well. But jumping into a Tesla closing the day up, actually, I'm so used to saying down. I mean, kind of feels like kind of down, doesn't it? But up technically about 0.25%, closing at $206 per share and 29 cents. So yeah, compared to the market, slight outperformance, I guess, but nothing to really write home about. And obviously putting up a pretty bearish looking candle on the daily chart. So let's talk about what I see moving forward, right? So, we had NVIDIA earnings yesterday, which I'll talk about, the chart on my NVIDIA video next. But, NVIDIA kind of brought the market down initially, but then the market off of the data this morning kind of went up actually a little bit, right? It had a little bit of a spike, and, Tesla obviously had a massive gap up. It is coming down for that gap fill, which is, it's just literally a few cents away now pretty much. But, Tesla did have a massive gap up, and it pretty much went within the first hour almost exactly to I'm pretty sure I said this in yesterday's video, the top of the channel, which was about 214, right? We talked about how today or tomorrow that could be an actual real target if NVIDIA doesn't mess things up. NVIDIA actually did mess things up, but we still ended up coming up to target at this 214 range regardless, which was a little bit surprising, I'm not going to lie. But nonetheless, we did come up, right? Right up to the top of the channel, right up to that 214, 215 resistance range, right, that I've been talking about for quite some time. And we rejected pretty substantially off of it, printed an inverted hammer candle, essentially went sideways, and then we continued downwards even further as the market really just continued selling off for the last couple hours of the day. So what does this mean moving forward? Well, let's talk about that, right? So the main thing I'll be looking forward with Tesla, really just in general moving forward, whether it's tomorrow or just, the next week or whatever, is just the 203 level, right? The 203 level. If we ever start closing at least 1 hour candles below 203, obviously more ideally like longer term time frame candles, like a daily, for instance, or something like that, that's going to obviously become a little bit concerning, right? If we start closing below 203, that's definitely signs of concern, and below 200 is definitely even more signs of concern, right? Those are not signs you want to be seeing, right? That would be pretty bearish, and that would make things, make things seem that Tesla wants to go even lower, right? That's kind of the way I'll be looking at it. But pretty brutal sell-off towards the end of the day, right? Pretty not ideal looking daily candle right now. We are still technically in this downward channel / bull flag, so you can still make some arguments that that is within it, right? As long as we don't go, at least in my opinion, below the 0.618 Fibonacci level, which is pretty much $200 per share, you can still make it easy arguments that this is just still a bull flag. But again, losing 203 is already a bit of a concern, but losing 200 is also not ideal because we lose that 618 Fibonacci retracement. And I think Tesla becomes more bearish. I really do, right? So the bulls really don't want to lose that, right? So definitely watch out for those levels, in my opinion, moving into the next, day, week, whatever, right? Definitely watch out for that. Now let's talk about it. Let's just say let's say we hold it. Let's say we do break out, right? Let's say Tesla does break out of this downward channel above 214. The next level will be pretty much 220, followed by 225, followed by pretty much 235. Those are the main levels to look at for the upside if we do break above 214, right? That's what I'll be looking at. Now, the downside is, well, I believe Tesla, if we do lose those levels I just mentioned, like pretty much 200, 203 roughly, I do believe that Tesla will at the very least come down to retest this kind of general, range, this trading range we were in, right? Which is like kind of like mid to low 190s. But ultimately, I think the target will be much lower than that. Well, not much lower, but lower. I think we'll probably come down to low 180s to high 170s. Like, I think that's a very real possibility. This is going to be entering into this massive volume profile. And that really becomes an actual, like, legitimate target, legitimate, area that we can revisit, right? So, definitely want to be mentally ready for that. If you're just holding shares throughout this turmoil, we'll say, or whatever the case may be, you want to be mentally prepared, especially as we move into September and October, which, like I said before, seasonality wise are literally by far, and it's not even close, the worst months for the stock market. You can see Tesla September, 25% win rate, by far the lowest of the last, let's go even farther back, actually. The last 12 years, you can see September, October, just very abysmal months, right? Not ideal. Now, obviously, there is still a chance that this is one of those rare occasions where September and or October could be the green one, right? It could be green. That is a possibility. It's not zero. There is a chance that is a possibility. But statistically, percentage-wise, right, it's really not in the bull's favor. There's a much higher chance that this is going to be most likely a not so great month in October compared to a great month. So keep that in mind, right? Same with SPY and QQQ, you can see, right? For SPY, September, horrible month. QQQ, horrible month. It's just, they're very, very poor months, right? It is what it is, right? It is what it is. So just keep that in mind, right? Just keep that in mind moving forward. Maybe everyone sees that. Maybe it's too obvious. Maybe because it's too obvious, it'll actually be a green month. Or maybe because it's so obvious that everyone thinks it has to be a green month because it's too obvious, but because everyone thinks it has to be a green month because it's too obvious, it pretty much becomes double reverse psychology. Who knows, man? Who knows? But again, just looking strictly at numbers, strictly at statistics, they're not in the bull's favor, plain and simple. And the levels to look out to the downside. Now, the worst case scenario I see for Tesla, right? The worst case scenario I see for Tesla is this, right? If things just go really badly, if September/October is just truly very bearish, right? The worst case I see is a revisit back to this green trend line down all the way over here, right? Which, if it'll happen sometime in September/October, will pretty much put Tesla somewhere in the mid 150s. 160, something like that, right? That's pretty much the worst case I see right now. Realistically, obviously the worst case would be losing this green trend line. If we lose this green trend line, unironically, things will get very bad. Tesla will probably come back down to at least this $100 per share, if not all the way down to $60 per share. As of right now, I obviously don't expect that to happen, but realistically, right? This is why I say realistically, September/October, if things get really bad, if the market really corrects, which, it's possible, right? Again, the realistic worst case I see is about, we'll just say 160-ish, give or take. Really depends on when it happens, but pretty much revisiting that green trend line. That every time we have come down to it, though, we have had a pretty substantial bounce off of it, right? All the way back here, substantial bounce here not too long ago, right? And during that earnings, remember? Massive bounce as well. So keep that in mind. That's important to understand, right? But that's the main thing I'm looking at. Let's go to the daily chart really quickly, right? The daily chart, could definitely be looking better now, right? We had that bullish MACD crossover. Unfortunately, with today's unfortunate performance throughout the day, we did get a bit of a, not a bit, but like a literal bearish MACD daily crossover, which isn't really good, right? That is going to potentially stall out on the bullish momentum, right? That's not what you want to be seeing. And going back to the stochastic, man, the daily stochastic, this thing is pretty powerful. Like I said, man, remember back when it crossed bearish over here, and I said how, this is probably my favorite indicator, right? And one of them, at least one of my favorite indicators to just really dictate momentum and just, where we could potentially go next. And a crossover to the bearish side on this thing on the daily chart, Tesla respects it pretty well. Tesla respects crossovers pretty well usually, right? A bullish or a bearish crossover. And in this case, we got that bearish crossover. It's been falling off a cliff, and the chart has been pretty much following suit, right? Just falling off a cliff. Ever since that crossover happened, we were pretty much around $223 per share. We're at 206 now. So, definitely falling off pretty aggressively. And unfortunately, there's still absolutely no signs of this even curling, right? Not just crossing back to bullish, but even showing signs of curling. It's just pointing straight down. It's like a waterfall, essentially. It doesn't show any signs of, ready to curl yet. So we'll keep an eye on it, right? We'll keep an eye on it. Eventually it will, of course. It's just a matter of when and at what price range will Tesla be at before this finally shows some signs of life. BX trender on the daily chart, also showing lower lows, showing the red band. So I'm not gonna lie, the daily chart, it went from having potential with the bullish MACD crossover to really not seeing enough follow through, getting rejected. The market really just not helping things at all. I'll talk about QQQ really quickly, really soon, actually. And yeah, just it's still, ignoring these down here, just looking strictly at the candles and the patterns, there is still potential. There is still potential here, right? As long as we hold 203, I still think there's actually potential. But if we start losing 203 to 200, that potential also starts to wane, and these indicators will probably accelerate the selling pressure even further, and that's not going to be good, especially entering a weak month like September and October for Tesla as well, but especially September. We'll see how it plays out. We'll see how this plays out, but things could be looking better. I'm not gonna lie, things could definitely be looking a little bit more promising than this. So we'll see how it develops. But again, keep an eye on 203/$200 per share. I think those are the main things I want to talk about. I mean, the weekly chart, obviously, you know, we had this multi-year downtrend line, right? The red line here, that we had this false breakout, came back down well under pretty aggressively too. Pretty much had what arguably you can easily call a dead cat bounce, right? This could easily have been a bear flag, these three white weekly candles that we did pump, but we pumped right into the resistance and we're rejecting pretty evidently so far. And again, you can, like I said, technically look at it as a bear flag. And, you know, if you look at it like this, you take the Fibonacci retracement, we pretty much retrace on this pump back up to the 0.5 Fibonacci retracement off of this massive fall. That's technically within dead cat / bear flag, you know, territory or range, right? It would have needed to break pretty much 235, 237 to get out of that, which is that 620 Fibonacci, in my opinion, to get out of this potential dead cat / bear flag territory. Unfortunately, it is still technically within it. And unfortunately, that can mean that, you know, there is more pain ahead. And if this were to play out, if this bear flag were to fully play out, like, you know, for instance, you know, you get this, like, you know, this little bear flag situation that we have right here, like this, right? If this fully plays out, this most likely will take us to the bottom of this green trend line, which again is probably around 160 over the next few weeks, right? Could be sometime in September, October. That is a possibility. We'll see. We'll see. One step at a time. I don't want to sound too bearish here, but, you know, again, as long as 203, 200 holds, you know, I think there is still potential. There is still looking, you know, some decent potential for Tesla here. I really do. But again, losing that, you know, at the very least, I think we come down to about the 180s to 170s. I think that'll be like the main target over the next few weeks, but it also opens up the door, like I said, to 160-ish for that green trend line. So we'll see. We'll see how it plays out, right? There's still a lot of stuff to be done, right? I don't want to jump to conclusions here. We're just kind of thinking well ahead, as if, you know, like what ifs scenarios, if you will, like, you know, what if this level is lost? Then what, right? That's kind of how we're looking at it, right? So we'll see. You want to take it level by level, day by day, week by week even. But that's just how I'm looking at it, right? Oh yeah, I want to talk about QQQ really quickly. QQQ, I have to say, I'm not a fan of it right now, right? It's, you know, there's a chance that it comes back down to this green trend line, right? It's had a false breakout above this, you know, pretty important level all the way over here at about 473, we'll say, to as high as about almost $480 per share. It had a nice little rally, but unfortunately, it lost it, right? It came back up into this range today, and it pretty much reversed almost all the gains for the day and ended red. So it's not looking too hot either, right? These are not bullish looking candles. These are not bullish structures, at least short term, right? The fact that it rejected this supply zone, you know, it went above the supply zone, looked pretty good, actually held support for some time, and then it just crashed back under, and then it's turning it back into a resistance. That's not ideal. At the very least, I think a gap fill back down to about 462 with this slight increase in volume profile is in play through this low volume, which can happen easily within the next few days to, you know, potentially the week, right? That can happen. And the stochastic on the QQQ also kind of looking like Tesla, just a waterfall down with that bearish crossover. So I don't know, man. The market's not looking ideal. I'm not gonna lie. I'm not trying to sugarcoat it. The market, I don't like how it's looking right now. I don't like that it had this false breakout. I don't like that it pretty much caved back under and is turning back into resistance. I don't like these kind of situations. I don't think it's a good look. And I can't imagine that being a good thing for Tesla moving forward. So we'll see. We'll see. Again, for Tesla, you know the drill. Break above 214, things get bullish again. Hold 203, things are still have potential for that bullish reversal. But again, losing 203, 200, things probably will escalate to the bearish side. So that's kind of how I'm looking at it moving forward. So thanks for watching, ladies and gentlemen, and I'll see you for the next one. Peace.